No matter how hard you work, you cannot become wealthy by exchanging your time for money. Unfortunately, you won't be paid for the time you spend relaxing, sleeping, or engaging in other activities because there are only so many hours in a day. What if there was a simpler way to achieve wealth? If money could work for you, would it? What if it turns out to be the perfect employer? Now, before we get into the video, make sure to subscribe to the channel, hit that like button, and leave a comment below, saying, "I subscribed." And we will do our best to personally reply to your comments. Check out the links in the description below for free giveaways, you'll love them. Quick disclaimer, it's important to note that we are not financial advisors. These are some of our viewpoints, to help bring out the best in you. This video was made for educational and entertainment purposes only. Consult your financial advisor. Here at Project Billionaire, we do our best to give value to you and to inspire you to become one of the future magnates. Now let's begin with the video. Money works continuously to grow your wealth for you around the clock, 365 days a year, because it doesn't require sleep or a salary. Fortunately, there are numerous methods to use your money to generate income for you. And when you put in your weekly 40 hours of work, your persistent money keeps working non-stop. So here are the 6 ways to make your money, make you more money. Number 1. High-yield savings account. High-yield savings accounts are insured and generally pay 20 to 25 times more than traditional savings accounts. They can act as a secure base for your army of dollars before you use them for more profitable but risky ventures, so that it can perform other tasks while it waits to be called and make more money. Consider a scenario in which you have $10,000 extra but are uncertain of the best method to use it to generate income. It will produce $200 if kept in a high-yield savings account with an annual percentage yield, APY, of 2%. Even though this is a little sum of money, keeping it here is preferable to keeping it in a conventional checking or savings account, which only gives about 0.1% annually. Any financial advisor will tell you that you should keep your money under your pillow. It's a good idea to set aside emergency funds equal to at least 6 months' worth of living expenses. It's ideal to maintain your emergency funds in a high-yield savings account so you can easily access them in case of need instead of investing the extra funds to improve your income. The process of opening a high-yield savings account is easy if you already have a checking account, but you can frequently get the highest rates online. By reducing the number of physical locations, companies are able to lower their costs and pass on the savings to their clients in the form of higher prices. Number 2. Retirement accounts. The 2 most significant retirement accounts are a 401k and IRAs. A 401k is an employer-sponsored retirement account. These are investment accounts in which your money are placed with the hope of experiencing exponential growth in the market. Since the money is deducted directly from the employee's paycheck, it is ideal for those who lack the self-control to save aside money on their own. When you invest in a 401k with pre-tax money, your taxable income for the year is lowered. Start saving as much as you can as early in life to get the most out of your 401k. When you've established your emergency funds, your next goal is to maximize your 401k tax efficiency and invest your money in the markets so they can start earning more money for you. In order to prevent leaving any money on the table, if your employer will match your contribution, aim for the greatest amount. Start investing in an IRA independent retirement plan, also known as a Roth IRA, or traditional IRA once your 401k has been funded to the maximum amount possible. Both of these retirement accounts must be opened and funded by you. A conventional IRA differs from a Roth IRA in that contributions can be made with either pre- or post-tax money, and money accumulates tax-deferred. However, after age 59 and a half, withdrawals are subject to current income tax. But with a Roth IRA, you may make after-tax contributions, see your money grow tax-free, and withdraw without paying taxes or penalties after you reach the age of 59 and a half. There are also less well-known retirement savings choices to take into consideration, such as basic IRA plans and employee savings incentive match programs, in addition to the IRA and 401k. Health savings accounts, HSA, profit-sharing plans, PSPS, and SEP plans for streamlined employee pensions. These retirement savings funds are often invested in stocks, bonds, mutual funds, CDS, ETFs, and other financial assets. It pays sense to start early, regardless of the retirement plan you choose to build your nest egg. Beginning early gives you the opportunity to take advantage of compound interest, reinvest your earnings, and create what is effectively a snowball effect that increases your money exponentially. For example, starting on your 20th birthday, you make a single investment of $20,000, and from then until retirement age, it grows at a prudent 5% every year. Around $90,000 will be the compounded value of your initial investment. Number 3. Stock market. If you want your money to generate income for you, you should think about investing in the stock market once you have determined the maximum allowable contribution to your retirement plans. Avoid timing the market or day trading, which is the practice of trading stocks to profit from the market's favorable movements. A long-term investing plan, commonly referred to as a buy and hold strategy, is better for you. Buying security, such as a stock, mutual fund, bond, ETF, or other type of investment, and holding onto it for a considerable amount of time is a conservative investing strategy. In this way, short-term market changes are not a concern in the investment. As a long-term investor, you will hold onto your investments in the expectation that the industry in which you invested will have increased significantly by the time you retire. You wait out any new developments that occur during this time in the hopes that, after 10 years or more, your investment must have generated a good return. The variation ought to stabilize with time, yielding an overall gain. Assuming a 10% average yearly return, a $10,000 investment would provide $25,937 after 10 years. Even better, your investment will increase to a whopping $105,624 in the same time frame if you add $5,000 per year to your account. There are now robo-advisors who can automate your investment portfolio using cutting-edge algorithms if you don't have the time or expertise to manage it yourself. A custom portfolio will be built by robo-advisors like Betterment and Wealthfront based on your goals, risk tolerance, and other settings. To reduce your risks, they'll provide you with a diversified portfolio made up of several funds. Index funds, individual stocks, target date funds, and real estate investment trusts, REITs, other ways to participate in the stock market and have it make money for you. Number 4. Real estate. The demand for housing is consistent because it is one of our most basic needs. Investing in real estate is therefore a smart method to make your money work for you by generating additional income. Investing in real estate is possible in both commercial and residential areas. Appreciation and rental income are two ways that investing in real estate pays off for you. When you sell a property, you make money because its value has increased over time. Keep in mind that location, upgrades, and development all contribute to accelerated property appreciation when making real estate investments. The most important component in a residential property's appreciation is its location. The value of an area increases significantly when facilities like transit routes, shopping malls, schools, and recreational facilities are built nearby. Renting out your property is the second way to profit from it. Rent is the regular monthly set amount that your tenants pay you. And both private residences and public buildings are covered by this. Let's take a look at some of the actionable ways you can start earning from real estate. Flipping. The act of purchasing a property, making improvements to it quickly, and then reselling it is known as flipping. You need a keen eye for potential homes if you want to make money from flipping houses. You have to be able to quickly estimate the actual cost associated with improving the property to the standard required and its potential value. You should be able to either do the repairs yourself or employ a remodeling company. Buy and hold. Here, you can buy a house or other type of property and rent it out. To relieve the stress associated with being a landlord, you can choose to manage the property yourself or hire a management company. Vacation rentals. Renting out a house or a room for a short period of time can bring in some extra cash. Homeowners and real estate investors can profit from this by catering to travelers thanks to businesses like Airbnb. Having a property in a popular tourist area will make this extremely profitable. Due to the fact that many tourists want to stay in hotels, there is a large demand for such arrangements. Real estate crowdfunding. This strategy of investing in real estate is best suited for people with limited access to funds. Traditionally, it costs a lot of money to invest in real estate. Because to this, it is now just the domain of the rich and those with financial access. But crowdsourcing for real estate projects has become increasingly popular recently. It involves the process of combining resources to make real estate investments. The best part is that you may get started with as little as $100. With just a few taps on your smartphone, you may buy a high-value piece of real estate on one of the many crowdfunding platforms for real estate. Number 5. Business. Starting your own business will allow you to earn a large sum of money. Even though there are dangers involved, investing in a startup can be quite profitable. If you can't handle the pressure of starting a business, you can be a silent partner by investing money in someone else's project. While you won't be able to influence the day-to-day operations of the company, if everything goes according to plan, you will have no trouble receiving a share of the profits. Number 6. Self-improvement. By raising your value, money can also benefit you in other ways. You will start seeing financial benefits as soon as you put time and money into developing your marketable skills. A high income and high level of demand in your business can be attained by earning certifications and professional degrees. Additionally, it is not necessary for you to spend 4 years at an Ivy League university or pay a lot of money to do it. Countless online courses provide you with the chance to continue your education at an affordable price and earn certification in your interest areas. So, to sum up, if you know how to use your money properly, it can make money for you. The suggestions listed above can all be categorized as passive income sources, or ways to earn money without putting much work into it. Even though it may sound simple, all forms of passive income need a considerable initial time and financial investment. The best part is that once you put them up, you may keep earning even while you sleep. There are other additional passive income sources. The list is not all-inclusive. However, the most vital point is that you now understand how to generate money, so choose one and go for it. Hope you guys were able to get great value and help you get to the next step closer to becoming a billionaire. We wish you the best of luck, everyone. Don't forget to check out our links below in the description. Thank you all for watching. Make sure to subscribe and like the video and let us know your thoughts. Until then, we will see you at the next video.